Hi there, you're watching Market Cafe on ET Now with me, Shreyanshi Singh, and over the next 1 hour, me and Priyanka Uppal will be getting you updates from within the country as well as across the globe. But well, let's get started with the top story of the hour. Then India celebrated the 76th Republic Day at the Kartavya Path in New Delhi, which marks the adoption of India's constitution in 1950. Indonesian President Prabowo Subianto was invited as the chief guest with a 352-member Indonesian contingent also participating in the parade. In fact, in addition to VVIP dignitaries, nearly 10,000 special guests were invited to witness the 76th Republic Day parade. You can see some of the visuals as well on your screens. This year's parade theme was Viksit Bharat Ki Or, Sadaiv Agresar, and the parade featured contingents from the Indian Armed Forces and paramilitary forces. In fact, with a total of 18 marching units, 15 bands and 31 tableaus in display. A key highlight of the event then was the first ever dry services tableau demonstrating battlefield operations across land, air and sea, featuring indigenous defense assets, the likes of Arjun battle tank, Tejas fighter jet and the advanced light helicopter as well. You can see some of the visuals on your screens as well. But with that, let's kickstart the show then and take a look at the handover then coming in for the Wall Street. Before that, let's also take a look at what's really lined up for this week, because this is a big week coming in for traders who hope to get a little more clarity on the state of the bull market. In fact, you do have 4 out of 7 companies in the Magnificent 7 that are also set to post quarterly earnings in the coming days. So I'm talking about Meta Platforms, Tesla, Microsoft, that are going to be reporting numbers on Wednesday. You also have Apple that will be reporting its results on Thursday. So keep an eye on that one as well. Now, investors will of course be using the upcoming big tech reports then to gauge just how long this artificial intelligence powered market gain can really continue. Positive results, in fact, could reignite the confidence. While if you have any disappointment, no points for guessing that could be hurting the broader market, roughly 40% of which is accounted for by the Mag 7 as well. Let's also take a look at the kind of handover that we then have against this particular backdrop. And what we're looking at then, all 3 major US indexes recorded their second straight positive week last week, reassuring investors that the bull market then remains intact even after December's dip. When you take a look at the S&P 500, that is the one that hit a new intraday record on Friday after notching a fresh all-time closing high in the previous session. So it was quite a strong week coming in as far as the S&P 500 also then was concerned. But let's also shift focus, take a look at oil prices, see what they're up to at this point, because oil prices were largely steady on Friday, posted a weekly decline though, ending 4 straight weeks of gains. So that was quite the move coming in. As far as the weekly move for oil prices then was concerned, this was of course after US President Donald Trump then announced sweeping plans to boost domestic production while also demanding that OPEC moves to lower crude prices. So let's also take a look at price movements then. Brent crude futures gained 21 cents, so just about 0.3%, closed around that $78 barrel mark. And when you take a look at US WTI as well, that's the one that gained just about 4 cents. 0.1% uptick coming in, $74 a barrel is the kind of level that you're looking at, even as far as Brent is also concerned. In fact, when you take a look at Brent and WTI on a weekly basis, 2.8% is the kind of gain coming in for Brent. And when you take a look at WTI on the Brent, 2.8% is the loss impact coming in for Brent. And when you take a look at WTI as well, that was also down 4.1%. So that's the kind of move that you had coming in. So on a daily basis, of course, you did have a little bit of a gain coming in for both Brent and WTI. But when you take a look at the weekly moves, you do have a loss coming in as far as both of these benchmarks then are concerned. Let's also take a quick look at gold then, because gold is the one to watch out for this week. You did have gold prices climbing over 1% on Friday, closing in on that all-time high, in fact, hit in October, as a weakening dollar also on US President Donald Trump's push for lower rates is something that we saw coming in. So spot gold was up about 0.7% thereabout. That is also something that we're looking at, but lots of news and updates to track, Priyanka.
All right, absolutely, Shreyanshi. It's a heavy earnings heavy week. Meta 7, Magnificent 7 has to release numbers, economic data, FOMC meet, whereas Trump is really pushing for the rate cut. But the market is pricing in the 99% chances there could not be any rate cut. But what are the key full events? Of course, it's going to be in full key economic data from around the world, not just the US, and from central banks action has to come in. Fed is largely expected to hold rates in the upcoming meeting which could be at 4.25% to 4.5%. Now, the Trump factor could play a major role. The newly appointed president has been calling for a rate cut and even the lower oil prices. This after the Fed cut its rate target by a quarter percentage point at its December policy meeting. Remember, the market is pricing in 2 to 3 Fed rate cuts this year, but let's see how this pans out right now.
Well, absolutely, and let's focus in on what Trump really did last week in a major escalation. Then US President Donald Trump then announced sweeping tariffs and sanctions on Colombia after it blocked US deportation flights carrying migrants. Colombia, America's third largest trading partner in Latin America, then hit back, threatening a 50% tariff on US goods. In fact, Trump labeled the move a national security threat, also marking a tougher stance in his foreign policy approach.
All right, and in their first call since Donald Trump returned to the White House, the US President and UK Prime Minister Keir Starmer discussed trade and agreed to meet soon. The leaders explored ways to promote a fair economic relationship as Trump eyes new tariffs on Canada, Mexico, and even China starting February 1. The move could have ripple effects on global trade, including UK exports.
Rather than moving on, Qatar has brokered a breakthrough in the Israel-Hamas ceasefire, announcing the release of Israeli hostage Arbel Yehoud and 2 others by Thursday. In return, Palestinians will be allowed to return to northern Gaza starting Monday, ending a standoff that had paused the ceasefire's key provisions.
Okay, moving on to some more news. American automaker Kia is recalling more than 80,000 vehicles due to floor wiring beneath the front passenger seat that can become damaged and even prevent airbags and seatbelts from deploying properly. Now, this move follows one in November when Hyundai and Kia Motors recalled over 208,000 electric vehicles to fix a transistor in charging control unit that could be damaged and stop charging the 12-volt battery.
Rather than moving on, some good news for music lovers when Spotify and Universal Music Group have struck a new multi-year deal enhancing access to UMG's vast music catalogue. In fact, the agreement includes direct licensing, new subscription tiers, and bundled content offerings. Now, promising richer experiences for artists, songwriters, and listeners. In fact, Spotify CEO Daniel Ek called it a step toward making music subscriptions more appealing globally.
In the meantime, South Korea's impeached President Yoon Suk Yeol has been indicted for insurrection over his brief imposition of marital law last month. Now, prosecutors allege the decree aimed to suppress political activity and even the media freedom. Yoon's lawyers called the charges the worst choice, while opposition leaders welcomed the move as a step towards accountability.
Alright, and with that, it's time for a very quick breather on the show. When we come back, we'll take stock of how the Asian markets then are faring, so don't go anywhere.
Welcome back. You're watching Market Cafe on 80 Now. Now let's get your cues from the Asian market, which is most of the markets which are open today have opened with a positive bias only. Japan and Hong Kong, that one has opened higher, and this is ahead of some crucial economic data which is to come in from China. China's manufacturing data, China's industrial profit data is on the top. Nikkei, however, has slipped into red zone now. It's down by 0.3%. Earlier, it was trading higher when it opened, but then now even let's keep our eye on topics also. That one also opened higher. That one opened higher by 0.9%, but let's see how that plays out. But then Hang Seng has maintained its positive movement. It opened higher and it's trading with a 1% of gain. Shanghai at the moment is 0.5% up, but the key monitorable events which will be on the tab today would be the China PMI data, which is more or less largely expected on the expansion mode only. 50.1 is that the figure that the market is penciling in, which is the last time's figure also. But Kospi at the same time is trading with a negative bias, down by 0.6%. Asia, Taiwan and South Korean markets are closed for holidays. Let's see, but then how this one's flares out. At the same time, Nifty, Gift Nifty implied, that one shows us that maybe it could be a soft opening. We could open lower by 168 points. But at the moment, the markets which are open, they are open. It's a mixed bag. Nikkei is down, Hang Seng is open, China and Shanghai is trading with a positive bias. Let's see how we flares out. Is it this gap going to maintain or we are going to cover? But at the moment, it's below 23,000.
Well, absolutely. Let's see how that pans out for us. But time now to take a look at the lineup that we have for you on the market. Then at 9:20, we'd be in conversation with Gautam Chowcharaya, who's the head of global markets at UBS, to talk about his wish list when it comes to Dalal Street. Then moving on at 9:40, then we'd be in conversation with the management of JSW Steel to decode their earnings. At 9:50, then V. Vaidyanathan, Managing Director and CEO of IDFC First Bank, will be talking to us about their earnings. At 10 a.m., Rajesh Sharma, MD at Capri Global Capital, will be talking to us about their earnings. And at 10:15, then Umesh Revankar, who's the Executive Vice Chairman at Shriram Finance, will also be talking to us about their earnings. Lastly, at 10:30, keep an eye on our conversation with the management of Godrej Consumer Products to decode their earnings as well. Lots of interesting conversations lined up for you on the market.
Welcome back. You're tuned into Market Cafe on ET now. Let's move on. The key earnings which were reported on the weekend, one of the major was banking major ICICI Bank. Gaurav is standing by with all the numbers. The bank did report a good set of Q3 numbers as far as the advance and deposits are concerned. Strong asset quality. Gaurav, morning. Tell us, you must have done the number crunching by now. What were the highlights of the commentary? How numbers are outgrowing the peers in the industry? Tell us more on it.
Well, yes. When we talk about ICICI Bank, we have got a good set of numbers from the bank. When we talk about net interest income, that increased almost by 9% because interest expenses were high, and at the same time we saw net interest margins also decline almost by 2 basis points. But this was all in line with what the street is expecting. On the other hand, PPOP grew almost by 15%, and this was because of the lower OPEX. And as a result, we saw profitability increasing almost by 15%, and this was actually higher than what the street was expecting. When it comes to advances, the bank has grown their advances at a rate of around 14%, which is actually very significant when it comes to a bank like ICICI, because they have advances in the tune of around 12 lakh crore rupees. And at the same time, when we talk about deposit, there we saw a growth of 14%. This was a little lower, but at the same time, again, this is something that the bank can manage because bank has LDR ratio which is lower than the other peers. Other than that, when we talk about advances, the majority of the advances growth was driven by business banking. There we saw a growth of around 32%, while retail loan book grew only by 10.5%. On the deposit side, we saw CASA account actually also growing in tune with the overall growth that we have seen. And as a result, when we talk about asset quality, we did not see any kind of concerns. In fact, gross NPAs and net NPAs remained stable quarter on quarter, and which was something which was positive was the credit cost, which also remains stable on a quarter-on-quarter basis at 0.4%, which was actually a very positive surprise, given that Q3 is usually weak for agri loans for the banks. But definitely a very good set of numbers from ICICI Bank. In fact, when we talk about commentary also, we saw a good set of numbers and good set of commentary from the management. They do not see any kind of concerns, although they see the system is actually slowing down, and that is the reason why we are seeing some slowdown in the ICICI Bank's growth as well. But overall, they remain very optimistic about the future as well. So definitely watching out on ICICI Bank on the back of the good set of numbers that they have reported for Q3.
Absolutely. Thanks, Gaurav, for getting us an update on ICICI Bank. Then healthy set of numbers and good commentary coming in. Let's also go across and listen into what Aditya Shah, who's the founder at Hercules Advisors, then had to say about the asset quality, deposits, as well as loan growth.
At the agri portfolio, let's say for the HDFC Bank also had a little bit of more slippages, and this is very seasonal. Q3 seasonally weak for the agri business. Not a problem. Apart from that, the results continue to be very strong. The gross NPAs have moved down from about 1.37% to 1.36%. As such, the slippages are also not significantly higher. The unsecured lending is not showing as many slippages as for other banks. So I'm not really too much worried on ICICI Bank from their asset quality perspective. I think their retail loan growth is just at about 10%. They've tried to curtail back on the loan growth as the asset quality moves continue to happen. So not too much concern, neither on asset quality, neither on deposits, neither on loan growth. I feel the bank is really very strongly positioned, and they will continue to do well over the period of next 6 to 24 months.
All right. Thanks very much, Aditya, for that view coming on ICICI Bank. Bank is in a strong position, and the kind of growth, or maybe the growth it has shown as compared to the peers are showing in the industry so far. The numbers have come in. Moving on, Petroleum Minister Hardeep Singh Puri emphasized that India will import fuel from wherever it is necessary. He expects India's imports to rise to 7 million BPD in 5 years. Listen.
One constant factor is that India will import from wherever it has to. If there's discounts are very good from a particular source, we will go there because our policy is to issue a tender at the point of importation. So the tender will be issued if we need particular grade of crude. Can you supply? Somebody will come. We'll give it to the cheapest guy. So we have term contracts also. We have this thing. I am not worried about that. And I don't think that our characterization of the world changing, we were importing less than 0.2% from Russia, went up to 30% or so. Look, I don't know what is my current consumption is 5.5 million. If the economy grows at 6.5%, 7%, I personally think we should go for a little. The figure will go up to from 5.5 to 6 and maximum 7 million barrels a day. Out of which, if my domestic production goes on, we'll still be importing a fair amount.
Alright, then time now to take a look at the budget wish list when it comes to the aviation space. Then, in fact, my colleague Sumit Chaturvedi then caught up with Interglobe Aviation CEO Peter Elbers, who talks about just that. Let's go across and listen into what he then had to say.
2025 is going to be a very important year for Indian aviation because we'll have two big new airports opening, and Delhi and Mumbai for the first time in history will be a dual airport system. And that's already in place in Shanghai, in New York, in London, in Paris, in Tokyo. All these places have dual airports. And now for the first time, these big Indian cities in Delhi and Mumbai will have two airports. They will open in this year. So that in itself is an incredible, I would say, stimulus for aviation in India. So the bill will have a lot of details on what to be done further and important. And I think the aviation and infrastructure, and there are some international reports, every rupee invested in aviation will turn into 3 rupees for the overall economy. So it is actually an investment. Whatever you invest in aviation is an investment in the future of the economy of the country itself.
All right. This is what the CEO is clearly bullish on India's growth story. But then now, while we are just away from the Union Budget 2025, we did caught up with a whole host of managements, the likes of LIC, PB Fintech, Century Plyboard, to Pidilite, to tell us what they are expecting from the Finance Minister this time.
There has to be some kind of a stimulus or some kind of an incentive that the industry is looking forward to get people to come under the cover of insurance. So the insurance needs to be popularized, and the creation of awareness among the population is one thing that certainly the government can do. And in the budget particularly, in case some kind of an incentive or some kind of a support for the missing middle that we are looking at, particularly the middle income group as well as the people who need insurance the most, which is at the bottom of the pyramid.
Classification should be created specifically for term and health. And you must appreciate that the premium going towards term and health, and specifically term, is a very small fraction of what is going towards life insurance. So one is not asking for a lot here. I think the total premium going towards term insurance is probably 6,000-7,000 crores. So it's not a very significant amount that's going. And I think that protection is it's required for the family, and we must encourage it. So even in the new tax regime, we must again create a carve out for just these two products.
One is Finance Minister's ability to put more money in the hands of Indian middle class or all Indians, ideally, if you ask me. The second, and therefore there could be some relaxation on personal income tax, and I think that would be welcome because it will spur demand. I think the second piece from our point of view as a company, I think the continued momentum or acceleration in that momentum in investments in infrastructure would be very, very helpful.
The tax exemption on the interest paid towards home loans, I think coupled with the fact that we're expecting some repo rate cuts in the current year will most likely lead to an increase in demand. So I'm hoping that takes place. Alongside that, one of the biggest issues with affordable housing today, particularly in metros and tier 1 cities, is the limit of 45 lakh rupees. I'm hoping that the government revises this upward. The furniture sector has been hoping for PLI schemes for quite a few budgets now.
Alright, then there you go. That's what makes it to India Inc.'s budget wish list then. But moving on, India's prowess in railway technology was on full display as it conducted the trial run of Vande Bharat train from Katra to Srinagar station on the Chenab Bridge last week. That's the world's highest railway bridge that we're talking about. The express train, in fact, is designed to endure harsh cold conditions. It also boasts of advanced heating systems to keep water from freezing and toilet tanks as well. In fact, the train can operate at a temperature as low as minus 30 degrees Celsius. The Katra to Srinagar Vande Bharat train is going to be commencing its commercial services next month. We do have Sahil Suhail standing by with more details. Sahil, tell us a little more about this trial run then.
We are right now inside the Vande Bharat express train that has finally reached Srinagar. It had started its journey from Katra at 8 a.m. in the morning, and now it's finally in Srinagar. This is for the first time that a train directly from Delhi has reached to Srinagar. It's a historic day for Jammu and Kashmir. Now we are going to show you how this train is different from the 136 Vande Bharat express trains that are already running in the country. This has been specially designed for the Jammu and Kashmir, keeping in mind the climatic conditions. The seating arrangement, in fact, is absolutely fantastic, and you will have a comfortable journey in this train. There are, in fact, the display boards that give you information about the stations and, in fact, other information that's required for the passengers. So this is one arrangement that has been done, and in Vande Bharat Express, in fact, why this particular train is different from others is that they are in fact heating arrangements for this Vande Bharat Express train. There are 900 volt and 1800 volt heating elements that have been basically installed for keeping the water that basically goes into toilets or in fact bathrooms hot. So that is the element that has been introduced in this particular Vande Bharat Express train. There is first aid kit, and for security concern there are CCTV cameras. There's 24/7. For emergency, you will have this facility where you can press a button and speak and in fact convey your grievance to the authorities concerned, and they will respond back to you. For fire and emergencies, there's also in fact a facility or elements that have been installed. These are basically the corridor of the cabin, and inside you have basically these automatic doors. Once you reach to them, they automatically open. So this train has been specially designed for Jammu and Kashmir, keeping in the view the climatic conditions that prevail in Kashmir Valley. It's 272-kilometer long railway track from Jammu to Srinagar.
Thanks, Sahil, for that detailed report. Thanks very much. We stay for a short break here. When we come back, we get you all the buzzing stocks and the key brokerage notes. Don't go anywhere.
Welcome back. Thank you so much for staying tuned in. Well, time now to take stock of the stocks that you should be keeping on your radar as well. Bright and early this morning. In fact, Ria is standing by with just that.
Yes, good morning. Let's take a look at the stocks that are going to be in focus today. A lot of stocks are going to be in focus on the back of their Q3 numbers. First up, we have Torrent Pharma. Now, the revenue has gone up around 2.8% on a year-on-year basis. Even the EBITDA has seen an uptick of more than 5%. If you look at the net profit, though, that has seen a surge of around 13.5% over the previous year, coming in at rupees 503 crores. And the margins have also gone up around 73 basis points, coming in at 32.5% in this quarter. Macrotech Developers has also reported quite a good set of numbers in this quarter. Revenue has seen an uptick of almost 40% on a year-on-year basis. The net profit has gone up by around 88% over the previous year. Even the EBITDA has seen an uptick of around 48%, and the margins have seen quite a good expansion of 188 basis points, coming in at 32% in this quarter. DLF, though, the revenue has gone up just marginally 0.5%. Net profit has seen a surge of around 61% on a year-on-year basis, but the EBITDA has seen a decline of more than 21%, and the margins have also contracted by 742 basis points over the previous year. Suvail Life has also reported quite a weak set of numbers. Revenue is down around 35% on a year-on-year basis. Even the net profit is down around 6.3%, and the EBITDA has seen a decline of more than 15% over the previous year. Lastly, also keep your eye out on KEC International, since the company has won new orders in its T&D segment of rupees 1,445 crores. So keep your eye out on all of these stocks today.
Thanks very much for highlighting the strong numbers, out of them. Let's move on. Let's get you the numbers, the key numbers, nifty earnings, which are to be reported today. Tata Steel is also set to come out with its quarter 3 earnings. And we have Ashesha to tell us what the street is expecting. Ashesha.
We are expecting soft set of numbers from Tata Steel this time around on a sequential basis. Remember, steel prices declined sequentially in the third quarter, and that is expected to impact realizations in the quarter gone by. Volumes, meanwhile, were on the higher side, and coking coal prices, which is the main raw material required for manufacturing, were also lower. So these are some of the parameters that will aid numbers, but all in all, sequentially, we are expecting weak set. As far as European operations are concerned, we are expecting a loss this time around as well, but the losses are expected to narrow on a sequential basis. Consolidated revenue expected at about 52,650 odd crores, which will be a decline of about 2% on a sequential basis. Margins, meanwhile, could come in at 8.9% versus 11.4% that the company had reported in the previous quarter. As far as India operations are concerned, realizations could decline by about 2 to 4 odd %. And apart from that, higher volumes and lower coking coal costs are expected to aid numbers this time around. Standalone EBITDA per ton could decline by as much as 10 to 12 odd % on a sequential basis. As I mentioned, European EBITDA per ton loss is expected to narrow this time around from $72 per ton loss that the company had reported in the previous quarter to about $55 per ton loss in the third quarter. Management commentary on capex plans, on the outlook going forward, on the pricing trend, and UK transition will be crucial. But all in all, sequentially, we are expecting soft set from steel major Tata Steel this time.
Alright, then thanks, Ashesha. So that is what is being penciled in as far as Tata Steel then is concerned for the third quarter. But moving on then, amid the persisting volatility in the market, we caught up with a host of experts and big names on the Dalal Street on their take on the market. Let's go across and listen in to what they then had to say.
Like the dollar index is due to sort of pull back to 106 in the near term, we can see a rebound rally back towards the 24,000 to 24,500 area on the Nifty, but this is still likely to be part of a consolidation and corrective pattern that still has some work to be done. So yeah, if we're talking about very short-term price action, I think the Nifty can rebound towards the 24,000, 24,500 area.
The index is holding up reasonably well, whereas the typical stock is down 20 to 30% already. So actually the indices don't reflect the reality of the damage. The damage is much more considerable. I would wait to buy into India at the present time.
If you look at consensus EPS estimates for India, any index that you look at, they're down about 7% from late September. The market is down 10%. But it means that the valuations haven't really corrected all that much. They remain almost as expensive as they used to be in mid to late September. When you look at the relative valuations, India in relation to Asia ex-Japan, that argument becomes even more egregious. India is on a forward P basis trading at about 62% premium to Asia ex-Japan.
The market bottoms out somewhere in this 22,800, 23,000 area, which I think is very important based on multiple studies. Breadth studies are oversold, sentiment is oversold, it can't get worse in terms of sentiment. So optimistic scenario is we bottom out somewhere here, 22,800 to 23,000. Pessimistic scenario is that if the budget does not go off well, FI selling continues, results don't go off well, SDFC Bank does not surprise positively, then we go down to that 21,800, 22,000 zone, which I think is really the worst case, which I'm looking at.
Bull market still holds. So we are very much in a bull market. Maybe it's a slightly more matured bull market. We have to consider the fact that we have had one of the most ferocious bull market that I have seen in my career after the technology bull market of 99 and 2000. Probably this has been the most ferocious one. So the kind of gains that we've had in this bull market over the last 5 years have been pretty strong and very phenomenal.
All right, that's what the experts have to say. They would want to wait and watch because expensive valuation is what is not making India still very attractive with this correction also. Moving on, Zomato is poised for swift growth over the next 10 years, according to Pankaj Murarka, who's a CIO for Renaissance Investment Managers. Listen in to what exactly he has to talk about the company's growth roadmap and what he's penciling in when it comes to the market.
We have to consider the fact that we have had one of the most ferocious bull market that I have seen in my career after the technology bull market of 99 and 2000, probably this has been the most ferocious one. So the kind of gains that we've had in this bull market over the last 5 years have been pretty strong and very phenomenal.
Talk about something which you got it absolutely right, and I think everybody wants to know that where is that cluster headed? Fintech and consumer tech, right? You bought into Paytm when everyone said no. You bought into Zomato when everyone says no. You bought into Policy Bazaar when everyone said even a bigger no. Now that everybody started saying yes to these stocks, the earnings are a bit shaky. From Zomato, from Paytm, Policy Bazaar, I think numbers have not come out, but the two horsemen, first Zomato and then Paytm, numbers were shaky.
Well, Nikunj, we look at numbers in the context of the expectation which the street has set. Look at these businesses from the perspective that all of these companies are just about 10 years old. These were businesses which were set up 10 years old. 10 years back, food delivery industry did not exist. And today it's an industry which does over close to about $10 billion of gross order value. Zomato is probably, in my reckoning, one of the fastest company to get into an index, Sensex, within 10 years of their formation. No other company, if you look in Sensex, has been able to get into the top 30 or top 50 companies of India within the 10 years of their starting date or in the first 10 years of the life cycle. That shows the kind of growth, exponential growth curve that these businesses have been in the first 10, 12 years of their being around kind of a thing. So while the numbers being somewhat under expectation, higher competitive intensity, few more players coming and all of that is more in the context of what markets or analysts expect from a quarterly perspective. I still think on a longer term basis, these businesses still have a very long growth curve ahead of them. I still hold my view that some of the leading companies of India, probably 15 years out, will emerge from disruptive tech, be it consumer tech or fintech. I think one of the top 5 financial services company will be a fintech 10 years out, because consumers like you and me are doing all our financial transactions now through help of technology rather than the old traditional way of visiting branches of banks or NBFCs. So I still think that given the fact that numbers were somewhat meaning under expectations, valuations had run far ahead, probably the trade had become too crowded because stocks have done phenomenally well. And as you rightly said, life has come full circle for some of these companies. Two years back or 3 years back, when Zomato was at 50 rupees or Paytm was under 400 rupees, no one wanted to own them. And today they've become some of the hot favorites, and most of the portfolios and investors have these stocks in their portfolio. So probably it could be a time for some calibration, some consolidation. But for a longer term investors, I think I still think that these companies will be some of the fastest growing companies of India over the next 10 years. I think that story.
All right, then moving on, let's get you some more updates from outside the world of stocks. Then Donald Trump has ordered a 90-day pause on all US foreign aid, including assistance to Bangladesh, as part of his broader foreign policy agenda. In fact, the latest move comes as the US government, through its donor agency USAID, announced the immediate cessation of all work in Bangladesh, including contracts, grants, cooperative agreements, as well as other procurement instruments. Moving on then, onto some somber news. Maharashtra has reported its first death due to the Guillain-Barré syndrome after a Pune-based chartered accountant succumbed to the disease. In fact, GBS is a rare immunological nerve disorder that causes sudden numbness and muscle weakness. In this condition, the body's immune system attacks the nerves. Moving on then, the investigation into the attempted burglary and knife attack on actor Saif Ali Khan then has revealed that the 19 sets of fingerprints that were collected from his residence do not match those of the accused at this point. In fact, sources also indicate that the Mumbai police submitted the fingerprints from Saif Ali Khan's home to the state CID Fingerprint Bureau, and a system-generated report also confirmed that the fingerprints did not match those of accused.
Moving on, some respite for traffic for the Mumbaikars. In Maharashtra, CM Devendra Fadnavis on Sunday inaugurated the northbound bridge connecting the Mumbai coastal road with the Bandra-Worli ceiling. Now, the coastal road would be open to vehicles daily from 7 a.m. to midnight, with public access starting from today. It will cut the current travel time between Bandra and Marine Drive and vice versa to 10 minutes now. Moving on from this world of sports, Jannik Sinner outweighed and dominated Alexander Zverev to win his second consecutive Australian Open Championship. The world number one overpowered the world number two in an emphatic fashion, not allowing a single breakpoint opportunity over the course of the match. Sinner joins Andre Agassi, Roger Federer and Novak Djokovic in a elite list of players to have won consecutive Australian Open titles in the 21st century.
Alright, and with that, completely out of time on this edition of Market Cafe on ET Now. Don't go anywhere because the market takes all of the action forward.
If you like this video, then like, share and subscribe to ET Now.